Do you believe the price of Tesla stock is too high or too low? Fans and detractors of Tesla still have unanswered questions about this. Remember to pay attention and keep watching to learn the expert's opinion on this. Experts disagree on whether Tesla stock is undervalued or overvalued, and everyone has their own justifications. It may be said that Tesla has prospered in spite of the various issues it faced. Critics contend that Tesla hasn't done enough to recover from the death spiral it's been in since the COVID-19 epidemic, which caused a number of production-related problems. You'll learn why an analyst says Tesla stock is significantly cheap in today's video. My expectation for the future is that in 10 years, people will look back at these prices for Tesla with a market cap under $1 trillion and say, "Wow, what a great buying opportunity it was back then," states James Stevenson. YouTuber James Stevenson specializes in creating content about Tesla stocks on his channel. Stevenson is an investor and Tesla owner who also occasionally makes memes out of detailed projections, charts, and assessments. Stevenson humorously tagged a tweet that featured Musk stating James, which is noteworthy with "Hey Elon Musk, who's your favorite retail Tesla analyst?" Stevenson also retweeted the comment. Elon Musk, the CEO of Tesla, responded to Stevenson on Twitter, saying that he's pretty fantastic. Musk is well known for responding to and interacting with his fans. It was quite awesome. Over the years, I have had the great fortune to receive numerous responses from Elon, none of which I can discern as justified. In a recent YouTube video, Stevenson said, "I've never met him. He just interacts with strangers on Twitter a lot." Regarding another content developer, Tesla Herbert, he stated that Stevenson is not just stating things. Rather, he thinks James is one of the few who provides extremely thorough reports, analyses, projections, and forecasts. Herbert is the host of the Brighter podcast, a channel that discusses a variety of topics like Neuralink, SpaceX, Tesla, and The Boring Company. The chart titled Stevenson Indicator, which was unexpectedly given a humorous moniker, shows historical and current Tesla stock data, providing the foundation for Stevenson's forecasts and analysis. Herbert and Stevenson, the indicator's developers, stress that it is not intended to be a source of financial advice. Herbert really said, "It's kind of fun. People don't necessarily need to take it seriously. Although it's simply one more metric, people may accept it for what it is because it's a neat discovery that you made." Herbert thinks that Stevenson himself observed that the stock shook up and down in prior years, and that there is a broad trend line where it kind of follows along rather nicely. This is how he came up with the Stevenson indicator. As a result, Stevenson displayed a trend line over time with bar graphs representing the stock prices as the dates progressed at the top of it. Additionally, the Stevenson indicator reveals that although Tesla's stock price has been underpriced recently, it has really been overpriced over the past few years. Do you believe the price of Tesla stock is too high or too low? Please leave your comments in the space provided below, Stevenson said. According to Stevenson, the diagonal line on the chart is what you see initially when you look at it. It is obtained by taking the closing price of that day, which was $72.24, and adding $1.69 to the stock each trading day. "There is no doubt in the line drawn on this record," he remarked, highlighting the most amazing feature of the chart, the absence of the diagonal line. "I take it that every line on this chart is either vertical or horizontal. Thus, the gap between the Stevenson indicator and the actual closing stock price for that day is shown by all those vertical white lines." He also mentioned that the line function displays the daily closing price of Tesla's shares, both above and below the Stevenson indicator. Having said that, this support line or function served as a cushion for Tesla stock throughout the majority of the tremendous bull market that lasted in 2020 and all of 2021. According to Stevenson, if you go back and compare it to this year, 2022, there has been a significant bear market for the entire year. The indication shows that Tesla has primarily traded below, but it has just begun to move back upward. I am asked this question all the time. Is this a joke? It is a joke, yes. Like any technical study, Stevenson's indication is not really reliable for anything. It doesn't predict future outcomes. It's just telling you what has already happened, adds Stevenson. And this is not trading advice. We're not providing financial advice. This is for entertainment purposes only, he continued. Herbert expressed the opinion that it is crucial to visualize the idea that Tesla is growing significantly each quarter and spitting out earnings, but that the stock price is not keeping up with that growth. Stevenson responded, either it will go up, or it will be good news for people who have money that want to invest in Tesla stock because they'll be able to buy more shares for their money. Herbert is aware that this is not to be taken seriously because of the made-up numbers and imaginary line kind of thing. He stated that if a company's earnings continue to double annually, the PE would eventually correct itself and the price will have to catch up. The American investor, mutual fund manager, and philanthropist Peter Lynch stated that even if the PE is high, a company is still a good value if its earnings growth rate is high and its earnings are not at risk of being realized. Then you should be okay paying a higher P/E for a stock that has much higher growth and future earnings potential than others, Stevenson states. Overall, according to Herbert, the Stevenson indicator indicates that Tesla's stock price has been expensive for a number of years, and rightfully so given the future outlook and projected growth. But as of late, it seems like the company's stock is very cheap. My expectation for the future is that in 10 years, people will look back at these prices for Tesla with a market cap under $1 trillion and say, wow, what a great buying opportunity it was back then, states James Stevenson. Tesla's shares have increased by more than 20,000% since the company went public in 2010. This growth has easily outpaced the market as a whole, routinely smashing Wall Street projections and making early investors into millionaires. To suggest that the rate of increase is unusual would be to put too fine point on it. Nevertheless, it is undeniable that Tesla's stock is rising. Many experts contend that the Tesla craze is really a bubble that will eventually burst, despite all of the potential benefits. In reality, because to the recently opened gigafactories in Austin and Berlin, Tesla is now prepared to build more vehicles despite manufacturing problems. Analysts and investors have good reason to think that when the aforementioned new manufacturing facilities are built, Tesla's production capacity will increase significantly. Stand up and move quickly. Furthermore, a lot of people believe that there is still a lot of demand for Tesla vehicles, particularly in China, where the EV manufacturer has already seen remarkable success. The global enthusiasm surrounding EV stocks and the tightening of emissions restrictions worldwide present a clear picture of zero and low emissions vehicles dominating the auto sector in the future, which favors Tesla as well. It has persisted in solidifying its position as the leading player in an EV market that is expected to experience rapid growth in the near future. Check out our other videos on our channel for more information about Tesla stocks.